welcome to this week's edition of World of Business, your weekly update into trending business news and latest developments on the stock markets. It's also on this show that we herald unsung but thriving business entrepreneurs. My name is Tafaranda Guta. Now, in recent developments, the ruling Zanu-PF party has adopted a series of sweeping economic reforms and resolutions at the just-ended annual conference in Mutare, signaling a strong push to reinforce the country's local currency, streamline business operations, and boost infrastructure and energy development. We'll look at these measures in details in the second segment with economist Mr. Persistence Gwanyanya and Mr. Misheck Ugaro. But first, we give you the exchange rates as of today. The Zimbabwe gold to the United States dollar interbank was at 26.56 ZiG. The Zimbabwe gold to the Great Britain pound interbank rate was at 35.50 ZiG. The Zimbabwe gold to the euro interbank rate was at 30.80 ZiG. The Zimbabwe gold to the South African rand interbank was at 0.65 ZiG. The Zimbabwe gold to the Botswana pula interbank rate was at 1.85 ZiG. We also give you commodity prices as on the global market. Gold per ounce traded at $4,131 after it went up by 0.54 percentage points. Silver per ounce traded at $48.05 after it went up by 0.67 percentage points. Copper per pound traded at $497.90 after it went up by 0.26 percentage points. Platinum per ounce traded at $1,521 after it went down by 1.67 percentage points. And that's it for the segment. Do stay tuned for the discussion in detail here on World of Business, exclusive to ZBC. Welcome back to the second segment of World of Business. Now, as hinted earlier, the ruling Zanu-PF party adopted a series of sweeping economic resolutions at the just-ended annual conference in Mutare, signaling a strong push to reinforce the country's local currency, streamline business operations, and boost infrastructure and energy development. Among the key resolutions, delegates called for the scrapping of the 2% intermediate money transfer tax, a move aimed at easing the cost of doing business and stimulating economic activity. Now, the conference itself also endorsed the Zimbabwe gold currency as the sole legal tender for domestic transactions. I'm now joined in the studio by Mr. Persistence Gwanyanya and Mr. Misheck Ugaro to help us unpack all of this. Now, gentlemen, welcome to the show.
Thank you for having me.
Now,
thank you, Tafara.
Sure. Now, Mr. Gwanyanya, I'm going to start with you. What potential economic output can we anticipate from the proposed removal of the 2% intermediate money transfer tax, particularly for small businesses and consumers?
It is important to realize that the 2% intermediate money transfer tax, IMTT, is, in my view, served the purpose and is produced positive results for the economy. The background for the introduction of the IMTT was a country that was facing huge fiscal imbalances, in that our books were not balancing. The government was expending more than it was generating. So IMTT was introduced as a revenue driver, is a revenue generating measure to enhance the revenue flows of the government and therefore balance the books of the government. Admittedly, IMTT managed to achieve a significant measure of that. The budget deficit, which is a reflection of the extent to which the books were not balancing, went down from an average of more than 10% of GDP to around 3%, and currently our budget deficit is less than 3%, and in some cases around 5%. We saw fiscal consolidation on account of IMTT tax. But fast forward, and now it appears now we seeing some unintended consequences of that tax, which may call for a review of that tax. And it's unsurprising that...
Sorry, Mr. Gwanyanya, when you say unexpected?
The unintended consequence
Yes,
is
the
coming...
unintended consequences, yes.
The unintended consequence is coming from the increased informalization of the economy that we have witnessed and that has been confirmed by Zimstats. Our economy is increasingly formalizing, and the temptation is naturally to also apportion some of the blame to the IMTT, in that maybe it would have caused some increase in the cost of doing business,
yes.
High cost business environment, which may call for the revision of that IMTT.
The revision of the removal?
Maybe revision. I don't know to what extent that revision can be. It can be a revision to the effect of removing it, but also a revision to the effect of reducing the IMTT tax. And I think it now needs experts to look into the effect of the IMTT and see to what extent that IMTT can be revised. But it is clear for everyone to see that in terms of the contribution to the revenue or to the budget, the IMTT has reduced from a peak of, I think, around 16% to around currently, I think the last budget, it was around 4.6%,
okay,
which may be a reflection of those unintended consequences of the IMTT, but also it could also be a result of other factors that have contributed to the increased informalization of the economy. And hence we have seen efforts even outside the IMTT revision by Treasury and by government at large to relating to the ease of doing business, which efforts I see them as also trying to reverse the informalization of the economy to the benefit of the flows of revenue into the fiscus, including the IMTT.
All right.
The worry could be...
I want to hold you there. Now, we're looking at the revenue. We're mostly looking at the ZIG, mostly. That's what we're trying to promote as Zimbabweans. Now, Mr. Ugaro, I have a question for you. How could the exclusive use of the Zimbabwe gold as legal tender for domestic transactions enhance currency stability and local economic participation?
Thanks, Tafara. The use of a local currency is actually a, how shall I put it in very clear terms, it's an unavoidable position that the country has to adopt. If we are to succeed in growing the economy and making Zimbabwe a renowned economy and hit the 2030 vision of an upper middle income society by 2030, we've got to improve on productivity, improve on cost of doing business, improve on our cost of production. And that can only be achieved by using a local currency. It is not efficient to use a hard currency as a base or as a cost base for production in the country. In short,
Explain it to us. Why not using a hard currency as a basis?
It is in short, more profitable for an investor who comes into Zimbabwe to localize the cost of production. By localizing that, I mean when you are producing in Zimbabwe, all your cost base is on local currency, your labor, your inputs, your raw materials, but your end product gets then exported and sold in hard currency. And the return there is better, is maximum, compared to when your cost base is in hard currency. Then the profitability will be low. And I would like to tie it to your first question on the removal of the IMTT and to what persistence has just mentioned. If you look at what the government efforts are doing now, and in line with the resolutions from the conference in Mutare, the cost of doing business is a critical factor to the productivity of the economy. Yes. So the cost of doing business has to be reduced, and the government is doing efforts, as we are seeing right now, to reduce the cost, of which the IMTT is just one aspect of it.
Okay, many,
yes. However, as a word of caution, Persistence mentioned the need to control the budget deficit. So if we look currently, the IMTT contributing about 4 to 5% of revenues, the complete removal of it means there is a trade-off in terms of managing that budget deficit, because it is a source of revenue for us. The IMTT is regressive in the sense that everyone pays the same rate, the poor or the rich.
Yes, it affects everybody.
Yeah.
Regardless.
So I think what the minister will play around with is to see what exemptions he can put. Foodstuffs, basic foodstuffs from IMTT, certain aspects of the economy, so that at least it is applicable in terms of raising revenue. As Persistence mentioned, it actually contributed significantly.
Now, on that one,
yes,
I'm actually interested. Mr. Persistence Gwanyanya, from an economist perspective, what are the key factors to contribute to building public trust in our local currency, the ZiG?
I can say currency is 60-70% confidence, and finance and economic factors, they contribute the rest. Confidence is quite key in sustaining currency stability. We have seen over time the market regaining confidence in our local currency thanks to the stability, but also prudent monetary and fiscal policy measures that were sustaining that stability.
True.
Humans are creatures of repetition. So if this stability is to continue, and we experience this stability on daily basis for a prolonged period, they are naturally they would naturally rally behind the ZiG. We naturally expect the ZiG's appeal to the market to increase. But in terms of also increasing the confidence, there's need to drive the demand for the local currency. Driving demand for the local currency, yes, it takes everyone in the economy, but also the government is a key player in driving the demand for the local currency. That's why you saw the Minister of Finance or the Minister of Finance coming up with some measures in the previous budget to drive the demand for the local currency, specifically as it relates to the payment of corporate taxes. Unlike in the past, starting last quarter of last year, corporate taxes are now payable half in the local currency, despite the currency of trade or the currency in which the profits are reported. You are now having to pay half in the local currency. Going forward, as indicated by the same ministry and minister, we expect more measures, and I think the measures will be announced as the roadmap to the monocurrency is announced as well, to increase the demand for the local currency. So government commanding more than 70% of the market power, is better placed than any other player in the market to drive the demand for the local currency. So as it is, you can see that it's something that is within the power of government to achieve. But more importantly, the currency must be seen to be delivering. The currency must be seen to be delivering in terms of the convertibility of the ZiG. As it is currently, ZiG has been very convertible on the interbank market. Those that want foreign currency to meet their import requirements have been able to secure the foreign currency from the interbank market, supported by the reserve accumulation strategy of the central bank. So the reserve accumulation strategy of the bank has seen accumulation of reserves in terms of foreign currency, but also precious minerals of 900 million by September.
And that is what we have here on the second segment of World of Business. Do stay tuned. We've got more to unpack on this interesting topic only on ZBC. Welcome back to the last segment of World of Business exclusive to ZBC. And as hinted earlier, we're still discussing a number of economic measures that were proposed at the just ended Zanu-PF People's Conference in Mutare. On infrastructure and energy, the party emphasized the need to accelerate key national projects such as roads, dams and border posts, while also reviving the rail system and restricting heavy trucks to protect the country's deteriorating road network. Now, Mr. Gwanyanya, back to you. How do major infrastructure projects such as road, dams and border upgrades contribute to trade facilitation and national productivity?
Infrastructure is an enabler to the economic growth. We coming from a situation of infrastructure, huge infrastructure gap that we needed to close. But the ambitious growth targets is always recovery that we targeting require us to focus on infrastructure first and create the environment for businesses to operate. Infrastructure is the basis on which the business can be productive, because you need infrastructure, functional infrastructure, to be productive as a business. You need functional rail, we need functional road, we need the dams, irrigation infrastructure, etc. But more importantly, given the structure of our economy, which is a commodity-dependent economy, infrastructure, especially relating to transport infrastructure, is very important. That's why we had seen focus on road construction, the Bed Bridge Harare Chirund Road, but also even now you are seeing more focus on the rail infrastructure to complement the road infrastructure. So it is very important for a country such as ours. But as we also try to integrate in the region, you know, there is Africa Free Continental Trade Area. We need to have robust infrastructure so we fit competitively in the regional space. So infrastructure is important to foster competitiveness
Mr. Ugaro,
of a country.
let me hold
But
you
also,
there.
given the increased occurrences of external factors in the country, you need infrastructure to help in building resilience in the economy. We have experienced a number of external factors like drought.
Mr. Gwanyanya, you touched on railway. I liked that. Mr. Ugaro, what economic benefits could arise from reviving the rail system and limiting heavy trucks on highways, particularly in terms of logistics, efficiency, and road preservation?
The direct benefit of using rail is the reduction in costs of logistics. Rail is very cheap as compared to the roads. By virtue of moving bulk, you find that the tonnage cost of rail is probably a third, if not less, of road, apart from the lack of damage and the need to repair roads that we are facing. In any case, if you look at the examples of the developmental states, such as the Asian tigers, and if we take in particular Japan, for example, how they recovered from the Second World War, infrastructure development was the lead to their revival, to their turnaround. So Zimbabwe should actually not be reinvented, will not be reinventing the wheel. They'll just be following what others have done. It is extremely important to have a sound infrastructure base. Zimbabwe logistically is well placed to be, it is the hub of the region in terms of logistics. So it has to have a resounding infrastructure base in terms of transport. So in transport, as you're saying, we're looking at the rail, we're looking at the roads themselves, and then the water and sanitation infrastructure, and then energy, which is power production, which will improve efficiencies in industrial production, industrial output.
Talking about energy, let me hold you there.
Yes.
With an emphasis on renewable energy and local manufacturing of solar technologies, Mr. Gwanyanya, what kind of industrial growth could we see in the coming years?
As a commodity-dependent economy, like I've indicated, and which seeks to climb the value chain, value addition and beneficiation is a key imperative. You can't talk of value addition and beneficiation in an energy deficit economy. But given our energy infrastructure, traditional energy infrastructure, there is definitely need for new energy infrastructure in form of renewable energy. And we have seen significant activity in that space.
In the energy sector,
but
yes.
You want takeoff and finalization of the projects that have continued in the pipeline to close the energy deficit. As we're talking about the recovery that we need in the economy and the growth that is happening in the economy, and where we want to go, it means there should be significant investment in energy. So it's an area that we think we need to be on top of, and there should be significant investment supported by the policies and ease of doing business reforms that are currently happening are also seen as supporting investment, especially the investment of huge investment of
Mr.
the
Gwanyanya,
type
let me
needed
hold you there.
for.
You're talking about infrastructure and expanding renewable energy. Now, how can Zimbabwe leverage these investments to become a regional hub for trade, transport, and sustainable energy solutions?
Yeah, like Mr. Ugaro has already indicated, we at the center
Yes.
of the region, we are actually a regional hub in terms of connectivity to the different ports. So we, and given the progress towards regional integration, we need to have sound infrastructure, including energy infrastructure, so that we are more competitive as an economy, so that we benefit from regional integration, which is a 2.6 or so billion economy and 1.3 or so billion population. So clearly focus on energy infrastructure is quite key as we try and climb up the value chain you want to foster the manufacturing sector. But as you do so, you also need energy to support value addition and beneficiation, but basically the manufacturing sector. So you are more competitive, you can drive a more robust economy.
Okay, now before we sign off soon, Mr. Ugaro, I'm curious, what kind of economic multiplier effects can we expect from improved energy access and transport infrastructure in both urban and rural areas?
Yeah, I would like to talk about two sides of it. The first side is not really a multiplier, but a challenge.
Also,
Zimbabwe is currently in a situation where it is not really able to raise suitable financing models for the infrastructure which we need. So we are currently financing our infrastructure from own resources and from the budget, which is creating pressure on the fiscus as well as on the monetary policy, because we are financing long-term projects with short-term finance. So that's rather than a multiplier, is rather a constrictor to it. So I think as we go forward, we need to come up with models of how we can suitably finance infrastructure. But as for the multiplier effect, it generates investment, it generates jobs, it actually is a lead sector to development of any economy. So the multiplier effect is that the country becomes efficient, it becomes productive, and once a country is productive, it is then able to support its currency. It leads actually to currency stability and economic growth. The vision being that of an upper middle income society by 2030 then becomes achievable.
okay. Oh, and that's it for this week's edition of World of Business. Quite an interesting discussion here we had in the studio. But for this week, my name is Tafaranda Guta, and from myself and the crew behind the scenes, it's back to business.